Welcome to the Corporate Forum at Sibos 2014, and I'm delighted to have a room full of very keen, interested people on Wednesday morning, so thank you very much for being with us this morning and hopefully over the next 2 days. My name is Marcus Treacher. I am a board member at Swift, and I'm also the board member assigned to sponsor and oversee Swift's services to the corporate world and how we change and grow our services and propositions to the corporate community. So a quick intro on Swift for corporates and where we are. I thought it would be good to take stock of how far we have come, and we really have come a long way, and it's fantastic data and a great story. So 1,300 corporates are now connected to Swift, and we're growing at a rate of 15% per annum, which is really tremendous. And if you look at the top 500 corporates, the Fortune 500, 43% of these corporates are connected to and working with Swift today. And that's a really impressive achievement in my view. 1,700 banks connected, and the traffic that corporates send and receive to and from their banks is growing considerably year on year. The data you can see for 2014, 24% file act, fin traffic up, and file act up 39%. Tremendous data. And also, I mentioned the Fortune 500. Swift, initially we felt that the main appeal would be among the larger corporations of the world. Actually, 41% of the corporates who are connected to Swift today are mid-range and smaller companies, looking at turnover below $1 billion. So that's significant. It says that the idea that was initially hatched for the larger corporates is also appealing for the mid-range as well. So we haven't kind of rested on our laurels. We're taking the project further, and we're currently working with you and with the community to do a number of things to really build and grow our proposition. So we're trying to make connectivity easier. We know that connecting to Swift can be difficult, so we're doing a lot of work with the internet options around Light 2, again, to drive down complexity and make Swift connectivity much more simple and appealing for the community. We're also expanding our thinking beyond just multi-bank connectivity to multi-business connectivity. And actually, we've come a long way beyond purely the cash management application of Swift. Initially, we felt that Swift was really applicable to treasuries, cash management, and not a great deal further. We found, actually, there's a tremendous demand right across the banking spectrum. Trade, for example, treasury, regulatory reporting, and even corporate-to-corporate connectivity. There's much, much more we can do together than we have done so far, and that's very, very exciting in my view. A few projects we have on hand that I'm sure we will touch on in the next couple of days. We're working on improving the standards, because corporates often say that once they connect to Swift, they're challenged because banks have different standards to then talk to them. So we're looking at how we standardize and make that simpler for the corporate world. We're also doing a lot of work around security, around identity, and again, seeing how we can help our corporate community and our banking community interact more safely through tools like 3SKey, which is a universal security offering. And again, we're moving into the trade world with the bank payment obligation. Anybody heard of that one? Hopefully you have. Excellent. This is Swift's drive to really create the fabric or the foundation for true digital trade services. And we've done some terrific work together, and I think we are really on the cusp of widespread usage around that new product. And that's tremendous. But we're not stopping there. We felt that really, given the success we've had over the past few years, we should kind of lift our game and build our ambition. So we worked together with the community, with people in the room and around the world, on a mission statement. And here it is. And it says, we want to be the most preferred secure network for multi-banked corporates globally. Simple statement, but we believe it's a very powerful rallying point with which to significantly grow both the breadth and also the offerings and the viability of Swift in the corporate space. What does this mean? If I kind of unpick that sentence a little bit, we mean the following. So to be the most preferred, we've also got to be the easiest to use. So we need to get much better on enabling corporations to work with each other and with their banks and with their market infrastructures over Swift, which includes enabling third-party providers with excellence to provide services over Swift for corporates to use with their banks. It includes creating more plug-and-play capability. So we're more than just a connection network. We become an environment for growth and for commercial benefit and business benefit. And also, we want to have a much wider range of messages that we can provide to corporates and banks worldwide. So we're getting beyond the basics and looking to see how far further we can go, again, with the corporate need at the heart of our thinking and the client at the center of our design work. I'll talk about security. Swift is a highly secure network, and I think security is arguably one of Swift's major selling points and strengths. So again, we want to build on that with our identity work and really help organizations work together in a much more secure way over the Swift network than they could ever do via more open internet connectivity. And we also think about scope. We want to be applicable not just to the large and the mid-range. There's no reason why Swift cannot be a perfectly viable communication method for small startup organizations. So we want to be very broad and appeal to a wide range of corporates. So we create an ecosystem within which corporations can work together and prosper and grow. And lastly, reach. We're in a good place already. We have corporates connecting to Swift from hundreds of countries around the world. And again, that's a great thing, and we'd love to see much more connectivity and much more activity around the major growth regions of the world. So when we look at Swift activity in the corporate world, there's a lot of activity in Europe, a lot of activity in North America, less in Asia, and less further in Latin America. And we'd love to get that volume up. We'd love to create an ecosystem where corporates can work together with their banks worldwide. It's very important. So that's our mission statement, and I guess we'll probably have a chance to talk through that a few times over the next 2 days. On to the corporate forum itself, and I think we've got a fantastic schedule for us over the next 2 days. And the theme here, without talking through bullet by bullet, is to really bring the enormity of Sybos into the corporate forum. We don't want to spend the next 2 days talking about easier connectivity. We want to spend the next 2 days talking about forecasting the future, optimizing treasury services, cloud technology, digitizing trade, as I mentioned with the BPO, new regulatory issues and how we work together to work in the world we find ourselves in today. And also preparing for renminbi internationalization. So it's really about how do we bring the enormity and the breadth and the thinking of Sybos and Swift to the corporate forum over the next 2 days. So I'm delighted to have you with us, and I hope we will provide you with a fantastic 2-day corporate forum. I'd now like to hand over to our keynote speaker, Paul Simpson. Paul is Head of Equity Asset Services at Bank of America, Merrill Lynch. Paul. Thank you.
Thanks. Cheers. Morning. Rather than repeat a lot of the great content that my colleague went through, I'm going to take a look at where things are at today, and then where some of the evolutions are taking us in the future, and really focus on how the landscape is evolving across these key areas. So key trends, development priorities, and innovations. If you look back over the last couple months, there's been some very, very interesting developments in the broad-based corporate space and the broad-based corporate payment space. You know, yesterday, obviously, we had the announcement of eBay and PayPal, it's spinning PayPal. You had the launch in the US of Apple Pay, where many different banks participated. We saw the momentum of the corporates coming over to Swift and starting to look at Swift as a key channel for them. And I have to be honest with you, it's really changed the game, because where you add value as a financial institution to a corporate and how a corporate looks at you has continued to evolve. And the channel itself is much more of a standard way to interact, and the value add is outside of that. And I do think one of the most telling signs to me that was raised in the last presentation is the amount of middle market companies that have joined. And it just shows you how much focus there is on this. If you look at specific industry segments, for example, so asset managers, NBFIs, a lot of them are really looking at Swift Direct Access as the easiest way to actually connect and build and ensure that they have scalability across their infrastructures. But those are some of the things that we'll touch on in the next couple minutes. Bottom line is there's still a ton of challenges that sit smack in the industry segment that both corporates and FIs interact in. And depending upon what events or talks you've gone to over the last couple days, I mean, regulation is obviously one that's significant. And regulation, if you look back a year and a half ago, a lot of corporates would have seen regulation, particularly as it relates to banks, as, okay, the banks have to deal with these issues, and then ultimately they'll have some impact on us. I will tell you, over the last 6 to 8 months, we've probably spent, 20, 30, 40 meetings with different sets of clients, multiple clients actually talking about some of the regulatory impact on them. So it's becoming much more front and center. Another area that I think is very, very important to corporates is the whole cyber threat aspect. You look at how the game's changed in relation to cyber threat as you look at front-end attacks. You look at all of the connectivity in the payment ecosystem relating to merchant acquiring and some of the issues that a lot of companies have dealt with. These are things that are going to continue to be major focal points with companies going forward. And frankly speaking, it's going to continue to increase the cost to all of us. So when you think about all of that, and you think about the evolution, I would say to you, one of the things that I've been most impressed about is how quickly Swift has jumped in a couple of areas, and I'll touch on that in a second. So in preparation for this discussion, I spent probably 22 one-on-ones with some of our largest corporate clients globally, and in probably 10 different countries. Because it's great for me to talk to you about what I think is important to corporates. It's much more relevant to actually get the direct feedback from the corporates and spend a few minutes on each of those topics that came up. And when you think about a key aspect that came across out of pretty much every discussion I had, it was much more of a standardization and much more of a replicable approach to different business process aspects that corporates are used to dealing with banks on. Onboarding was one thing, and it sounds simple, it sounds very standard. It is a huge challenge, and the consistency across it and across the industry for some of the corporates is really problematic, particularly when you're talking about large technological onboarding where you have ERP integration and other things. When you look at some of the other things that have really driven some of the trends over the last year or two, business continuity, contingency. Look at some of what's happened in the world and how some of the changes have impacted some of the largest clients and even some of the smallest clients. And you cannot have all of your eggs in one basket. I remember personally having a discussion with a large corporate treasurer of ours about a year and a half ago. and the treasurer outright said, if you were me, what would you do in relation to having 1, 2, or 3 payments banks, for example? And you cannot afford to have all of your eggs in one basket. It just absolutely does not make sense. And when you look at how corporates are evolving, a lot of what they're doing is ensuring continuity and contingency. Talked about security. You cannot stress that enough. Some of the largest corporates in the world have had significant security issues relating to cyber threat and breaches. And depending upon the industry segment you're in, a breach like that could be monumentally disrupting and monumentally costing. If you look at some of the merchant acquiring breaches, we're talking 40, 50, 60, $100 million costs for some of these clients. It is a real problem. And what it means is we're going to continue to have to spend money there to enforce and improve, but secondarily, it's going to be something that everybody's going to have to think about when you're looking at the partners. It's going to be about the weakest link. The weakest link in that chain is going to be really what the focal point will move towards. Development priorities. So I'm not going to go through each of these in detail. I want to spend a second to talk about evolution that I've seen. And I've been in this industry for 25 years, give or take. And I have to tell you, in the last year and a half, my hat's off to Swift. Because Swift has always been intelligent. They've always come up with very innovative, smart things. All right. But the reality is the game has changed because what Swift has done is they've shown their ability to actually execute and implement. They're going to go live with the KYC registry in December. They're going to go live. They've gone live with some of their sanctions products. The key is that we used to think that banks were the ones that were directly benefiting from this. The reality is that the corporates are going to be the ones that will benefit most, because if we can move to utility-like protocols, for example, on KYC, think about the amount of expense, think about the amount of time, think about the amount of efficiency that corporates will derive from that. Instead of dealing with 10 different banks and different KYC protocols, you deal with one. Now, initially, KYC is very focused on FIs, but it's clearly a topic where I would love to have corporates weigh in with Swift and make sure you stress the fact that you think it's really important. If you're a Swift Direct Access corporate, Swift has to move to corporates next. Because again, it's about saving you time and money and having consistency across that. When you think about some of the other things that Swift has done, InnoTribe to me is probably one of the most interesting things, because what it is, it's about commercializing innovation. It's about taking companies that are not approaching life like large banks. And large banks are great. I work for one. But the reality is large banks do not execute quickly and are not nimble and do not look at kind of industry-changing protocols that will make corporates' lives easier. So Swift's investment in that and the whole approach of looking at technology or business model-driven companies and actually helping use them and commercializing them across the industry, I think has been something that's been really good. I also think as you continue to look at Swift, the thing for me that is most relevant about them is they are a trusted broker. They have certain hierarchy, certain background that industry will always look to. And at the end of the day, the world will continue to change, and banks may become much more like infrastructure providers, and you may have different aspects and business models that will emerge. I strongly believe that Swift will play a central role on some of that. I want to spend a few minutes on innovation because I mentioned a couple of the key things or events that have been taking place. We've been very involved in some of them. And I'm not going to focus as much on the events. What I want to focus on is what will it mean to kind of the industry segments that we all operate in. So intelligent receivables think about it as STP improvement across one of the toughest areas in the world. Corporates have been using shared service centers across payables for a long time. The trends continue to move more and more towards how can I take a shared service approach to some of the other areas or products that are extraordinarily difficult. The reality is that we're sitting in the US, so a US-centric comment. The US is still way too paper-based. When you think about how we look at information flows or process flows, still way too much paper. But what we've seen over the probably last 2 years, year and a half, is there has been a lot of innovation in dematerializing some of the receivables continuum. A lot of innovation in looking at a shared service approach and saying, okay, how can we pick 2 or 3 things out of the process and actually make them electronic, digitize them, so that we'll take 20 to 30% of the expense out. So I think you're going to continue to see a lot of innovation here. It's going to take a lot of cost out of the system for both corporates and banks. Digital disbursements. When you think about peer-to-peer payments, so all of the names that you guys would know and love, peer-to-peer payments at its simplest level is about infrastructure. It's about leveraging replicability and infrastructure that exists in an industry or across multiple industries. So where the world's evolving is taking that peer-to-peer concept, that peer-to-peer infrastructure. When you get down to the infrastructure, it really comes down to a DDA. It's a DDA or a relationship with a corporate or an individual that basically is, it can be a phone number, it can be a bank account number, but it is a relationship. What we've seen over the last year and a half and what we're seeing from a lot of clients is actually leveraging the peer-to-peer approach, the mobile phone number, and evolving into wholesale payments. Areas like, the insurance industry. Anywhere where you have business-to-consumer payments, this is a very, very applicable opportunity. And what happens is the cost goes down dramatically. And your ability to deliver to your clients, so your consumers, if you're a consumer products company or your insurance company, it goes from 2 days to 30 minutes or to an hour. And if you think about some of the challenges the world's undertaken in the last year or two relating to weather, relating to other things, the reality is that this is so impactful. Consumers or your clients as corporates not only feel the impact, but they will remember forever that you were able to help them out quickly. So that's been an innovation we've seen a lot of movement towards. Let me spend a second on NFC or Apple Pay-like protocols. So everyone saw 2.5, 3 weeks ago the launch of Apple Pay. We and several other large banks were part of that business model, if you would. And at the end of the day, what it's really about is leveraging existing infrastructure. It's leveraging existing DDAs of consumers that sit in the United States. When you think about this, and you think about the mobile phone, and you think about mobile technology and where mobile has gone, you look at the generation that is below us. So my daughter is a freshman in college. I don't think she's been to a banking center in her life other than to actually establish an initial account before college. The phone is used as a source of interaction. The phone is used as a source of transaction. That's going to continue to be the way that the world's going to evolve. So when you think about what Apple did, and you think about what has been done in some other countries as well, that's similar, you really could be looking at a complete game shift, because some of the infrastructure that's existed for years and years will become less applicable. So when I think about over the next 2 to 3 years, the changes that I expect to see, there will be competition in the payment space that we've never seen before. And some of that competition will live or die based upon regulatory conform and how they're able to interact and operate with any given regulator. The good thing for banks, the good thing in a kind of bizarre sort of way, is regulation is complex. Regulation is not consistent from country to country. So one of the strengths that the banks have lived off of is the ability to deal with that regulation. If regulation becomes more uniform and consistent, the ability for some of these non-bank providers, corporates, to play in space that we've seen will grow. Secondarily, I absolutely believe that information security, cybersecurity, some of the issues that the industry's been dealing with will be the number one thing that we're all going to have to deal with. Because if we can't protect that, and it's the collective we, so corporates, us, etc., if we can't protect that, we really have a hard time looking at changing anything in the payment chain. So I think what's going to happen is you're going to have some very strong innovation in that space that will again lead to a game change and lead to other entrants that really have not necessarily been in the industry before. Kind of last and foremost, when you think about scale and you think about the ability to operate on a global basis, there are very few parties or infrastructure entities that actually have that capability. I think that if you look, again, what I said before, if you look at what Swift has done and you look at some of where they've invested, it would be fair to say, if you're provocative, they've gone from investing in 10 to 15 things to 3, maybe 4. They've put people full-time focused on investing in that. I think you're going to see more and more opportunity for Swift and a few others to really play those infrastructure roles on a global basis and change how some of the business models have been in place for years and years. So if I'm a corporate and I'm looking at the next 2 to 3 years, and let's take a jump and say I'm a global corporate in more than 10 countries. 5 things that I'm definitely going to do. 1, contingency, contingency, contingency. You need to have multiple contingency plays if one of your providers doesn't, operate or isn't able to operate. 2, really need to think about the security of the information you have and the type of information you have. Different industry segments, an information breach is much more horrible than others. If you're one of those industry segments, you're already there. You're already investing there. But the reality is that you don't know what you don't know. And I'll give you examples. So, if someone hits your front end with, 10 million transactions at the same time, if you are not set up typically through a third party, there is no way you're going to be able to handle that, and your system's going to crash. So this will be a consistent theme that we'll feel across corporates and FIs. Last, the third thing that I think is absolutely relevant is talent. And I haven't spent a lot of time on talent, but the reality is that whether you're a corporate or an FI, the war for talent and the type of talent you need in the new world is completely changing. It used to be, it was great having expertise of people that understood, for example, payments or treasury or receivables or collections within a corporation. I think where the world's evolving is it's much more someone that can understand the end-to-end business model, can actually help you determine where the weak links exist, and then ensure that you're secured or you're protected across the way. So I'm going to close there. You have a phenomenal group of people that you'll be hearing from in a second. I think there is a lot of opportunity for corporates. I'm a huge supporter of Swift Direct Access. I think for a corporate, it really allows you to control your own destiny. It allows you contingency opportunities that wouldn't exist otherwise, and you have a lot more flexibility. I also think, and I would also ask, my one ask of corporates is, it used to be where the banks would push a lot of the industry protocols as it relates to regulation. We really need your help. We need your help to actually be the voice, because if the banks go and talk about things on their own, we're always looked at as the banks are complaining or the banks are feeling stressed or hurt because the world's changing. At the end of the day, it's about us. It's about you guys, the corporates, and us, our ability to continue to work with you. So we need your help. We need your voices with the regulatory authorities. We need your voices to actually be part of everything that we need to do together. So I'm going to end there. I'm going to ask Axel Miller to come up. Axel is a partner with Oliver Wyman, and he's going to be the monitor of the upcoming panel. Thank you very much.